Our next guest says that while the immediate scare might not be over, the recent bank stresses have created some long-term challenges for his sleep. No, long-term challenges for the flow of credit and a medium-term trilemma for central banks that might be impacting his sleep as well. We'll see. Here to explain, Joe Amato is the president and chief investment officer at Neuberger Berman. Good morning to you.
Good morning.
How's your sleep?
Good to be here.
8 hours.
Sleep was okay this morning. Yeah, I was excited to be here. My first time back in the studio since the pandemic.
Welcome. Welcome.
Yeah,
so how is your sleep? How should everybody's sleep be right now?
Well, I think you've got a couple of things going on as it relates to the debt ceiling and then the credit issue that you referenced. And the data that came out yesterday, senior loan officer survey data, showed a tightening of standards, not as worrying as many of us might have thought, given what was going on in the banking system over the course of the last couple of months. But if you saw the loan demand was also weak, so you're actually having challenges with supply and demand. Right. And as we've talked about, as you guys talk about, credit is the lifeblood of the economy, so that credit situation is worrisome. Then you throw on top of that the debt ceiling issue, which feels like the meeting in the White House today is going to be the kickoff of a bit of the drama that we're going to be faced with over the course of the next month.
Okay, let me layer on one other piece, because I think once you get to Q4 or Q1 of next year, you really are going to see some of the commercial real estate issues start to roll in meaningful, problematic ways for the banks. So right now there's been sort of a pause on the regional banks, meaning people are feeling maybe things are temporarily over, but are they over?
Well, I think you've seen some of the deposit data show that you're not seeing the significant outflows that you would worry about. Yet at the same time, there's a skittishness because we all saw with Silicon Valley and some of the other banks how quickly flows left Silicon Valley Bank. Now, that was a unique situation for sure. Lots of characteristics that are not necessarily shared by a lot of the other regional banks, but it's something that you've seen in the stocks being so volatile. Yesterday, opening up big, getting pounded pretty hard last week. So I don't think that's over yet in terms of that skittishness in the market, but the deposit data I think is the key thing to look at.
You're going to have to pay a lot more to keep those depositors.
Yeah, I think it's more of a. I think ultimately is more of an earnings issue.
Right, and you start wondering about the models for the banks and what real profitability is going to look like.
I think you've got to get the regulatory framework right for the banks below the level that have been more heavily regulated.
What do you think you spend a lot of time thinking about this? What do you think that framework should be?
I think if you look at what was done with the large banks, essentially it was you need to hold more liquidity and you need to have a bigger capital cushion. So that
which, by the way, will drain credit from the public.
That's one of the concerns, right? And as much as we have this fragmented banking system that a lot of people like to criticize, those banks are in the community, those banks are providing credit, and if you concentrate banking that much more, I think it has credit extension implications over the long term.
And their earnings won't be as good as it is.
Yeah, well, you're going to be certainly deposit betas are higher, so you're going to have to pay more to keep deposits. The other question on the regulatory front is what do you do with guaranteeing deposits? And I'll leave that to the senators to talk about.
Is it weird in a macro sense that I don't know whether I want a recession to happen so that the Fed stops or that we avoid a recession, which it looks like we're doing right now, but that means the Fed doesn't stop. So I don't even know what I want. What do we want? A very mild slowdown that allows the Fed to stop?
Yeah, it feels like there's three ways the Fed will end up stopping. One is you're in a recession, which is not good.
But we don't want that.
Expression, we don't,
but they
do. I don't know they want a recession. I think they want inflation to come down.
Okay.
But the second issue is you have financial instability. Again, bad outcome, right? So those two scenarios, the only positive scenario for the Fed to stop is inflation coming down at a more rapid rate. It surprised us on the upside. Who knows? It may surprise on the downside. That's not our base case. We think there are a number of the components of inflation that will remain sticky as we get through year end. But you're going to see inflation come down.
Right.
And the policy rate, if you're at 5 or 5.5 and inflation's at 3, that's a very steep real rate of interest that the Fed is going to have to address.